think it's my year. Yeah.
Right. Today on the morning show, we are talking about sector rotation. They say it's the lifeblood of a bull market. When are we going to see it? Are we going to see it? We will find out. We'll talk to Frank Cappelleri from Cap Thesis in about a half hour or so. He's the person that will help guide us through this discussion. We're going to look at some charts of other sectors, right? Not just semis, communications, financials, right? And then, of course, when are we going to see it? How do we know we're going to see it? Very important stuff. So that's going to be with Frank Cappelleri at 9 o'clock. We'll have Kenny Glick stop by, tell us what he's trading or already traded today. We'll have Phil Pearlman leave us with something to think about, a pearl of wisdom, if you will, something to take with us as we go through our day and our week. That is our plan. Good morning, chat. Good to see you. Everyone, we're here. JC, Steve, Capiche? Let's go.
Oh, yeah, we're back.
Mm.
We're not going away, Spencer. We're not going away.
Strazza, fix your camera. I don't know what's going on there.
Strazza, come on in. Come on in. You know, we started doing this years ago.
Unplug
because
it.
me and Strazza were doing it anyway.
Yeah.
What are you seeing? What's moving this morning?
Yep.
And one of the things that I found helpful about doing this every single day is that, you know, like we actually have like a process of going like through all the things and like, you know, hard to miss things when you're sitting there, you're talking about them. And, you know, you guys in the chat, you know, you help keep us accountable.
Yeah.
Right. Calling me out on my bullshit. The chat does not discriminate. If they think that I'm full of it, they'll tell me. Right, guys? You guys tell me.
Yeah. Yeah.
Who's buying Berkshire? So who's selling Berkshire puts? Anybody selling Berkshire puts?
No.
Nobody?
I don't think so.
No, but this is like one of, and Sean too. Sean will tell you for years and years and years, you know, Berkshire starts looking like crap, Berkshire Hathaway, and it looks like it's about to completely fall apart. And then the bet that we make on a regular basis is that's not what's going to happen. And instead, it's either going to keep going sideways or go up. Most of the time, it goes up. This is one of those times. And Sean did not hesitate. I said, Sean, sell naked puts in Berkshire. He goes, yup. Just like that. Just like that. So I'm in. We are in the Berkshire Hathaway. Can you throw up their slide 2 there?
Do we have slide 2? Do we have Steve Strazza?
And we got the Strazza. There it is, Strazza. It doesn't get any cleaner than that, baby.
It's clean, but it's not necessarily like a bull market stock. I don't mind selling puts in this. I don't know if I want to buy calls, but.
Well, I did all those things.
I'm rooting for you. Hey, I thought more about the conversation. Yeah, I'm not in that either. I thought more about the What?
Can we talk about a few lessons here?
Yeah, I want to talk about the conversation from yesterday. So financials relative to the broader market are some sort of warning signal, right? That's what we're going with.
Are we going with a warning signal?
I think he was posing.
I think my bigger point is that it's a denominator fallacy. It's hard for anything to keep up with the technology exposure that you have in the S&P 500, and you see it across intermarket ratios all over the world. Like the indexes full of Taiwan and Korea are dominating the indexes that are full of Canada and Australia. It's not that Canada and Australia suck. It's just hard to keep up. You know what I'm saying? So I think it's more of a denominator fallacy. And if it was a warning, you're going to see it in the absolute price, and you actually aren't. In fact, if you guys would be so kind as to throw up the new slide 2, I think that this is probably, you know, if you're thinking that the financials making all-time lows is a warning sign, then I think that this one is front and center, because if this one is above those 21, 22 highs, then you're wrong, I think.
Yeah, I don't think it's a warning sign, right? Because if we're going to say that XLF SPY not looking good is a warning sign, then a warning sign's been in place. then a warning sign has been in place for 20 straight years, as we've gone through one of the most historic stock market rally periods of all time. Banks have been, or financials have been showing a warning for 20 years, right? So that's been bad information to follow. So I got, somebody reached out, a longtime viewer. I think we scared him a little bit with this talk. So I had to talk him off the ledge a little bit.
I mean, listen,
this really doesn't fucking matter.
Couple of things. I think it does fucking matter. Number one. Number two, I don't care who you are. You have the S&P 500 Financials Index closing at the lowest levels ever relative to the S&P 500. I don't care who you are. You go, you see that, you go and you take a look inside and see what else you could find to see if this is actually a problem or if it's a denominator fallacy and it's just fuck. It's just hard to keep up with tech. I mean, right? Like, is it that? So then you dive in and obviously that's what I did. And so not only did I find that there was a lot of strength in the small cap financials, a lot of strength in the mid cap financials, I went out and bought Berkshire Hathaway, which is the largest component of the financials index. Hello.
I mean, to be fair, financials look terrible relative to small caps too. So I don't know how much of it is the S&P 500 being on the bottom of that ratio. Yeah, but look at XLF IWM. Well, that's looked terrible for 30 years.
There's your denominator fallacy again, though.
IWM's an awful index.
Not lately.
No, but JC, to your point though, you can also just look at any other index, well, any other like non-tech index, and they would look at the same. It wouldn't mean, it may not be quite that bad, but I mean,
look at XLF Dow. Gross.
I was saying
terrible.
We're down near 2-year lows, by the way, for small cap financials relative to the Russell 2000. Just an FYI.
I mean, we're at basically all-time lows on Staples SPY, right? So
I think it's also a low volatility thing, right? So Spencer brings out a good point. Spencer brings up a great point that
nailed it.
Yeah, well, you know, one for the good guys. So Spencer called out the staples. Well, what are you going to find in the low volatility indexes? A lot of financials and a lot of staples.
Yep. And financials act like these other heavily regulated groups. They are regulated utilities, the big banks. The largest components that drive XLF are very similar. I would say they have more similarities to the utility sector than anything. Financials.
All right. So you like my trade. You like the long Berkshire, sell puts. You just don't necessarily like the calls. You like long the stock and you like short the puts, correct?
I like short puts in Berkshire. And I think that this is a stock that belongs in a lot of people's portfolios. Totally. Long-term investors, I think Berkshire's great.
Yeah, they do a great job of raising cash in the middle of a raging bull market. Great job.
Berkshire is in my long-term account. It has been for years.
I like that for you, Spencer.
It's one of the first stocks I ever bought, actually.
Yeah, but Spencer, when I see Spencer, like I think Berkshire Hathaway.
I know.
You're a Berkshire man, Spencer.
You are. You know how Strazza has like man crushes on like certain CEOs like Dara and Brian Armstrong and stuff like that. Like Spencer's a Berkshire guy.
Spencer went to the shareholder meeting.
I know.
I don't have any
Warren's
CEOs.
last one. Was it Warren's last one?
Second to last one. I think. I don't have any CEO crushes like Steve, but I do have like famous investor crushes, right? And sure, certainly Warren Buffett and Charlie Munger. There are people that have owned
Who's
Berkshire.
number 3? Who's number 3 for you, Spencer?
You won't like it.
Who? Sean McLaughlin?
No, I was going to say
Michael Burry.
I was going to say.
Why wouldn't I like it? Ben Graham. Have you seen Ben Graham?
Jack Bogle.
James Altucher.
Jack Bogle did more good than most people ever in the history of society. In my
Bogle was great.
Bogle guy too.
Yeah,
I love that pick. Bogle was incredible, and he was a great educator too. He did a real service for financial markets and investors forever. Yeah, shout out Jack Bogle. He doesn't get enough credit. I couldn't agree more with you.
Oh, well, thanks.
Totally on board with that. That's a great take.
Should we do a quick state of the markets and let's look at the 10-year, shall we?
All right, let's do that.
Yeah.
Ladies and gentlemen, we got the Dow futures down 250 today. So that puts it at 49,625. We got S&Ps flat this morning at 74.20. We got the NASDAQ 100 up 0.25% at 29,240, up 70 points. You got 30-year bond futures down 0.25% at 112 flat. You got crude oil up slightly at 102.5. You got copper up 1.5%. Copper 662. Wow, very impressive. All-time highs for copper. Gold flat this morning at just under 4,700. You got silver up 1.6%, just under 87, with the VIX at 18. VIX at 18, up slightly on the day. Let's go over to funny money. How the old funny money's doing. It's kind of just been churning sideways. It's really what's been happening. So the old BTC, you got 80,000 on the BCC, down 500 this morning. Ethereum, 2780, flat this morning. You got Solana, 92.5, down 2%. Down 2% on the day. Total crypto market cap, Mr. Spencer Israel, 2.64 trillion. 2.64 trillion.
You know what we're doing with the crypto right now, JC? In every one of our portfolios?
Buying them.
Which is loading it up.
I saw some of the trades cross the tape yesterday. I saw that. I was like, man, this guy's getting aggressive. No, I saw him.
We're going for it.
I took a look. I sometimes, not all the time, but sometimes I'll be on my phone and I'll see the trade coming through and I'll be like, yeah, all right.
You saw yesterday's?
I saw it yesterday. And I looked into it and I was like, yeah, I don't know. It's a little cute for me, but I get it. Listen, I get it.
Hey, a little spice is nice in these times.
I know. You're getting a little frisky there, I think.
Speaking of Tom Lee, let's go already with the Biminer. I'm so ready for the Biminer. Let me get my Biminer.
What does Tom Lee have to do with the Biminer? Can someone explain that to me?
I think he's the guy. He's their salesman.
So is he just like
isn't that Tom Lee's thing? Didn't his company
His face is on it? Yeah. I'm sure there's other people like operating the company.
All right, I don't know.
He's the face of it. But Biminer, leveraged ETH. Let's go. ETH has some catching up to do.
It's too many derivatives, bro.
Well, we're
too many derivatives.
Like I said, you could trade calls on the BIM if you want to just really go for it.
So you got the ETH, which is a derivative of Bitcoin, let's just call it, right?
Mm-hmm.
Then you got the Biminer, which is the treasury. Then you got the leveraged Biminer, which is the leveraged treasury. Then you got options on the leveraged, right? So like now you're just so many derivatives away from the center that like I am just a big fan of the underlying. Like call me old fashioned. I'm a fan of the underlying.
Would you call it all one giant synthetic market?
This is part in
synthetic CDOs, right? Anyone?
Because you're right, JC. There are ways to structure just Biminer calls. You don't need BIM calls, right? You don't need to deal with that like thin chain, wide bid-ask spreads. You just trade the Biminer calls. But it's
speaking of being incredibly unprofitable, can you throw up slide 2 there, please? So here we're looking at non-profitable tech. Goldman Sachs. I would love to get my hands on Goldman Sachs's list. We never were able to do that, were we?
It's been made public like at various points. Like I've seen like years ago I saw a list, but
you might be able to get on the Bloomberg actually.
Can we just get that list?
This is a great thing to follow, right? But anybody can make their own list.
Hold on, tell me why, Spencer, because usually I come up with something and you tell me that it's dumb. So tell me what makes this one so good.
What makes non-profitable tech a cool thing to follow?
Yeah.
Because it's just a proxy for growth. Right?
Right.
So and when it goes, it's fun. Everyone likes buying these stocks. I don't know what's in with this specific index, but we could all make our own index. We don't need Goldman Sachs, right?
This is really solid evidence of the improving risk appetite that we've seen over the course of the past 5-6 weeks. Right?
Yeah, this is
awesome. Buying the junk.
This is great.
Speculative growth. You know, some people making fun of Kathy Wood out here. I think you want to buy the Kathy. You just want to be long Kathy.
Speaking of, bought a.
Is she the guest today?
What?
Is she the guest today?
No. But I did buy a quote unquote Kathy stock in the old SMTV portfolio last week.
Ooh, I want to know.
But I saw it. It wasn't because of Kathy. I saw it on AC Premium, and it came up on our show last week. So
I'm curious
when I see that confluence of mentions. We talk about it all the time. So
nice.
Yeah. I don't even know if maybe it's profitable. I'm not even sure. It
doesn't matter.
Might not be.
Can you throw up slide 2 here?
Nice. We're replacing slide 2.
Yeah, we got a new slide too here.
Yeah, I like that, Spencer.
Nobody likes the stocks here, the humans. You got only 20% of the humans think that stocks are the best long-term investment.
I would need to know who they asked, because your age will
baby boomers
will determine your answer to this question.
100%.
Yeah, but baby boomers who bought real estate and baby boomers who made money in the stock market, they're going to have way better experiences in the stock market.
Not in all cases. Depends on what market
the S&P 500 didn't return on every more on every single time frame in the last 50 years.
No,
JC's my grandparents bought their house in Greenwich for $17,000.
God damn.
We're never gonna get gains like that in the real estate market, like never. And that definitely beat the S&P 500.
No, but JC, you are right, but nobody brags about their 401k balance, but they brag about their house, right? So
yeah, why is that?
Yeah, why is that?
Because houses are tangible. You can't live in your portfolio.
First of all, anybody who brags about the money they have in their account, I don't talk about that with anybody. Nobody asks me, it's just not something you talk about.
Nobody wants to hear it, but we'll all brag about oh yeah, I got a great deal on it.
Yeah, I bought this house for blah blah blah. So yeah, you hear that a lot.
I mean, I wouldn't, because I don't own a house, but I would if I owned a house.
But buying a house isn't a flex. For me, buying a house is a sacrifice.
That's right.
I bought a house for my family by the lake, right in the mountains.
Yeah.
I mean, it's not so much. I'm winning too. Obviously, it's not so much of a sacrifice, but I could definitely do way better things with that money than have it stuck in a piece of real estate up in the mountains. That maybe it goes up a little bit, but the opportunity cost is off the charts. And I have I was talking to Strazza about it last week on the phone. I'm like, we take the kids skiing. We go up there. The kids absolutely love it. We're in Disney World going on a ride, and they're talking about roasting marshmallows in the Poconos. True story. They love it. So for me, it's a sacrifice for my family. I mean, I like it too. So I'm not lying. I like it too. But I could do way better with that money.
Yeah, but you're analyzing it from a purely financial investment standpoint.
No, I'm justifying it my own family experiences too.
Yeah, no, but the benefits you're getting from that house are not quantifiable, right?
You know how I know they asked this was
making memories is what they tell me.
You know how I know this is a boomer survey? This I know this is a boomer survey. It says stocks/mutual funds. I don't know anybody under the age of 50 that owns a mutual fund, right?
That's right. That's also correct.
Yeah, I don't think I own a mutual fund.
It's sticky money though. People say that those mutual funds won't be sold until basically the accounts are passed down.
They've been saying that.
Money market funds don't count as mutual funds.
No, they're cash.
Yeah. All right.
That's a good question, actually. I mean,
it's a fund. I own those because you see them in the statements.
You're probably right. I don't know. Anyway,
I like bonds. I think you got to own the bonds, even though people think bonds are going down. You need interest-bearing assets in long-term accounps. However you want to do that. If you want to,
I don't think I don't like the bonds. Whatever. I don't like the bonds at all. In fact,
I'm sure you're invested in so many bonds. I'm sure you have so many bond funds.
I'm short bonds and I have no bond funds. Where would I have a bond fund?
I'm going to ask your advisor, because you're definitely in some bond funds.
I definitely don't have any bond funds. I don't own a single one. Even in my kids' college funds, we're all in on equities. Yeah. Zero bonds. In fact, I'm technically short bonds. Even though I don't have a net short bond position, with my energy exposure, I essentially have a short bond position. And I think that the vulnerability by Earthlings is that the Earthlings have unintended bond long positions that they don't even know about because of their lack of energy and commodity exposure. I'll die on that hill. Americans and Earthlings worldwide are short, are super net long of bonds, right? They're betting that rates are not going to go up. Yeah. They're not in energy. They're not in commodities. And I think they're fucked.
No, but nobody thinks like that, though.
I know.
Yeah.
That's why I'm here to tell you that's what's happening. And nobody thinks like that. But I'm here to tell you the truth. And there's a tsunami coming and they're all fucked. I'm telling you right now. Maybe not tomorrow. Probably not tomorrow. Maybe not even this month in the next few months. I'm telling you right now, there's a tsunami building out there. And these Americans and Earthlings all over the place, they're just not in the commodities. They're not in the energy. And that mathematically gives them unintended bond exposure that if bonds get smoked, rates rip, they're fucked.
I do not prescribe to the notion that those things are the same trade.
Okay.
Just throwing that out there.
Just telling you how I feel. I don't know anything. I don't know what the market's going to do today, tomorrow, next year. I have no idea. But
yields were falling in the early 2000s. It was one of the best runs ever for energy stocks.
JC, do you want to add international to that
was
list
a completely different regime, Strazza. You're comparing apples to oranges. I don't know what you're talking about.
Well, they're both fruit.
I don't know what you're talking about.
I don't know what you're talking about.
I don't understand the question.
Different regime, and you know it was the bond market and the equities market and commodities had a different relationship 25 years ago, and you know that.
You think I need to reread this?
Yeah, probably. Dude, rest in peace, John Murphy.
So good.
So good. Rest in peace, man. You know, I think he was struggling for a while. He was a little MIA for a long time. Yeah.
JC, you could add international to that list too, right?
Yeah, indirectly. Again, speaking of derivatives. Yeah, Spencer, you're not wrong. Yeah, like indirectly, there's international outperformance there, you know, potentially. I don't know. I actually don't know it's not as clean. It's not as clean.
Well, I mean, speaking of bonds, I mean, can we talk about the 10-year? I mean, there's inflation. The inflation is here. The PPI this morning said so, right? We got it, right? The 10-year is at, what is it, at 4 point? I'm looking at I'm not looking. I'm looking at the regular, not the futures. We're at 4.47. Where are we at? 4.48.
Is that a lot?
It looks high.
So what you're telling me is that inflation's higher, so the bond market got it right. Bond market's already been telling you that. If you want to throw up the new slide too, this was from last week.
Jay Hampton says that Biminer and MicroStrategy are finance tools. Yeah. They're actually financial instruments. Stocks, bonds, options. We call these financial instruments. Same way NVIDIA and Apple.
I believe they're securities, is what they're called.
They're
not securities?
They are securities, absolutely.
And so there's the bond market telling you that, you know, if you want to know about the bond market, you could listen to the pretty lady on the TV, right? You could listen to the economists if you really want to go down that rabbit hole. Don't suggest it. Economists are not your friends. And
don't do that.
And but the bond market, on the other hand, like I always say, I trust dogs and I trust the bond market. After that, I got to question everything.
How about cats?
No, man. You don't trust a cat. You can't trust a cat lady either. That's why I don't trust you. I don't know if everybody knows that Strazza is our resident cat lady. Is that Lola?
Yes. Do you hear what he said about you, Lola?
I don't trust cats. No way, man. They got those whiskers, bro.
Me neither. Cats don't trust me either. For some, I don't know.
Yeah.
PSA also reminder, since you brought up the chart of the tip there, tip and treasury inflation protected securities are protection against surprise inflation, not any inflation. It has to be a surprise, right? For the tips to actually work.
Just the tip.
Yeah.
Inflation expectations.
Right. Exactly.
Right.
So
I might go swimming with some sea turtles this weekend.
You can't touch them. Right? You touch them? Aren't they like poisonous or something? No,
you could touch them. Green turtles, you could touch them.
Yeah. They don't bite you?
No, they're beautiful. They're so chill, man. Like if you ever spot one in the water, we just did in Virgin Islands last year. If you spot one, like you could just follow it around. Like you just chill with it. You get your snorkel.
What are they looking for? They're looking for like leaves and grass.
Yeah.
They're not hanging out animals, right? They're vegetarians?
No. Yeah. And
they're on slide 2.
How many slide 2s could there be? We just had.
You know, when was the last time you saw Finding Nemo? Remember Crush?
Yes. What about him?
Dude, Crush
Great
is the
movie.
man. Crush is the man. So this, you know, Spencer makes fun of me when I bring up like politicians tweeting about the stock market. Like he thinks that I'm just being like an asshole or whatever. Like
dude, did Ron DeSantis nail it?
He starts getting all sassy with me.
Did he nail it?
I was here in real time talking about this. This isn't like hindsight capital over here. This was go back, check the tape. I was telling you the morning DeSantis was talking about the Mag 7 stocks. I was right here talking about it. And the minute he was talking about it again, I was right here talking about it. You know it. I know it. The chat was here, and Spencer Israel was giving me shit. He was giving me shit both of those times.
Wait.
I'm telling you.
Well,
so that second tweet was at the lows?
Right at the lows. Got it.
Oh,
Nailed
God.
it.
I'm going to have to follow him.
Dude, Ron DeSantis. Isn't he a Florida man? He's a Florida man, right?
wow. Who knew?
Hell yeah.
I knew. I was telling you in real time, God damn it. So next time I bring this up, don't give me any lip.
You did. We laughed at you.
You're
right.
I'm not entirely clear what you're getting at. You're saying that every tweet from him on this topic is either a top or a bottom. Is that what
he came on and he said this is,
first of all.
Is that what you're saying?
He came on and he said this is good sentiment data, and we laughed at him, Spencer. Like, no, you're being ridiculous. And now he's got the chart to back it up.
Who's keeping the receipts, huh? But Strazza remembers for once in his life. Strazza's giving me credit.
I give you credit all the time. I don't remember the Indian CEO thing. Don't be mad. I don't remember that.
I've been talking about the Indian CEO ETF for years, bro.
I didn't know.
How many times have I been to Mumbai? How many Indian friends do I have? I have more Indian friends than I have Connecticut friends.
A lot of times. Many times, maybe.
I love India. Telling you. Indian CEOs.
They're great operators, right?
I just think there's a zillion of them. And like Indians that eventually they're going to make their way to CEO. There's a zillion of them, and they're like smart, right? And like,
isn't it just like Asians in general?
Yeah.
I don't want to blanket all of Asia. I'm focused on my India CEO idea. And Michael Milken agrees, by the way. Michael Milken agrees. I don't know if like that means anything to you, but I'm just saying we got one of the greats telling everybody that JC's right.
Is India Asia or Middle East?
It depends who you ask. No, it's
okay. Yeah. It's a big country.
It's a lot of people.
Yeah.
All right, let's bring on Kenny. So, Kenny, what's your trade today?
It's been a long time coming. They ain't cuffing my clock, they tugged it. Putting up numbers, 99 problems, and I still kept it 100. Hola. Yeah.
Con el corazón piden a la patria, mamita, perdón. Morenita sola, cada una en su lugar. Sus voces con los tambores dan muy buenas vibraciones.
I don't know where I found myself hanging out in the Grateful. I went to the.
Yeah, how was the show?
It was awesome, and then I found myself in some Latin house club by myself, just getting down.
They got those in Jersey.
I was Pitbull, of course. And I said, yes, I am Pitbull. Thank you very much.
They got those in Jersey.
What's shaking?
All right, Kenny, tell us about the past few days. Yeah, I know I saw your thing this morning.
Oh, man. Yeah, lots of happening. So, yeah, we just had somebody that embraced the horror of the market never going down. Thank you very much for embracing that. So yesterday, we were actually shorting some stocks. There's so much to unpack here, but I'll just be brief. A couple of trades that we did in the morning were really nice long trades, and they actually rolled over and became shorts. And it was bewildering to see the market actually going down. And I was like, I still don't want to short this market. And then finally got to a point where I'm like, all right, now it's showing me something different. Let's get some shorts. And then I reminded everybody, it's not going to last. Shorting is short-lived, and you're going to die. It's going to rip into the close. Don't worry about it. And like, why would you say that? This is the first day it's selling off. Shh.
Did we embrace the VWAP? Should we breathe it in? Can we breathe it in?
I had somebody had a $60,000 day yesterday. So pretty freaking awesome. And it was just that. They missed the short. They were like, I'm with you. I don't want to short anything. I'm with you. I'm going to wait for the turn. And they waited for the turn, bought some QQQ calls and some NQ futures at the end of the day, and absolutely tore it up. And let me show you something also. Before I forget to show you this chart.
One of the guys in your room made 60 grand in a day?
Yeah.
Nice.
It was a combination of options and futures. So, I mean, if you're not trading futures, man, when you get a futures trade right, I mean, 7 contracts goes a long way. Let me just get the chart up. Hold on. Sorry. Because
power of leverage. This
is important. Yeah, the power of leverage, right? And then once you understand what you're doing, that's why these trades, any one of them is scalable. So here's your QQQ chart from yesterday. Mm-hmm. So, here is what I talk about a rigged market. So again, you're a faux show bro away from ripping in your face on every trade. This is not a market that's going down. We had our down move. Congratulations, you lived it. That was the bear market of the decade from February 3rd to March 31st. It's over. But here you go. We're finally going down. Oh my God, it's the big one. No, it's never the big one. Faux show, rip to the VWAP. And then if you thought it was over, look how beautiful this move was. Faux show right underneath the VWAP, breaks it into the end of the day. This is at 305. So you're talking about options that are going to expire in 50 minutes. You're buying some, these were the 30, the 703s. But remember, this guy was already in the trade already, put down here. But look at the beautiful 1 minute right to the multi-day as if it was programmed to go there, because it is. Yes. And then look at today's sell-off. It goes right back to the orange line. The area we got from yesterday is now today's support. So if you're delusional enough to think we could actually have 2 down days in a row, are you nuts? But if you're going to be crazy, there it is. If it breaks that orange line, you might get another little retracement that won't last. So again, what a market this is. It's just unbelievable. It's so awesome to just accept that it really is rigged. We can't go down. And when we do, we still go back up. The first selling we've had in a month and a half was still met with a monster move right in your fotch. So awesome, awesome trading. Anyway, NBIS this morning.
I was talking with Brian Shannon yesterday about the 2-1 VWAP, the 2-day, the multi-day VWAP and the 1-day VWAP combined. I was talking about yesterday.
Right.
Talking VWAP pinches.
Right.
Right. Shout out Brian Shannon. Everybody go give him a follow.
Hell yeah, man. He's the overlord of VWAP. So I am just the Sith Lord at this point.
He told me the story yesterday. He went to T3 2000. They were trying to get him to start using their platform because he was making YouTube videos at the time. You know, Brian was an early YouTuber.
Yeah.
I remember 20 years ago going and watching his videos. And these guys were like, hey, why don't you use our software? And, you know, you could promote that on your videos, right? And he's like, all right, I'll make you a deal. This is what I want you to build. You build it. I'll use your software. And that's what it was. It was the 1-day and multi-day VWAP. And the point and click where you could point to any date and time, any point in time, and have a VWAP from there. And you know, they did it for him. And then now it's on every software ever. So I got the whole story. I got the whole lowdown. And then, you know, over the years, you know, he learned more and more things. You know, we talk about the IPO VWAP. You talk about that a lot, right? Yeah.
And the 3 months also, because when you're doing with the earnings, I like looking at 3 months worth of VWAP because it gets you the whole institutional 3 month, the quarter since the last earnings report. It's always been good. But let's talk this stock right here, NBIS. This was one that, again, you want to be a shorter? Well, you better pick your spots. And if it holds VWAP, you know that's the end of the trade. So NBIS gapped up. You know, just looking for a sell-off. It came, and it's over. But if you guys know about this one, is one of my favorite names for today, EOSC, energy play. By the way, big news coming out, Cerberus. Everything that we own in the photonics and the chip sector revolves around the new Cerberus. This IPO is going to be massive. If you guys don't know about it, do some due diligence. But this is an energy play right here. And monster move up. Nice little short going on. Not looking to short it. So I'm looking for them to bleed it down. Hopefully get down to that 9 area. And then look to buy this EOSC. And I got another one for you is KOPN. They reported yesterday. Little known name. Keep an eye on this bad boy. It's kind of like the ATOM that I was showing you a couple of weeks ago. So already had a monster move, little consolidation. Keep this one on the radar for going forward. All right, friends.
You too can trade with Kenny. Hitthebid.com. He's there right now. He's there every day doing his thing, making money. See you, Kenny.
Just making the day's pay. No big deal.
No big deal.
All
right, let's talk sector rotation, okay, with Frank Cappelleri. Sound good?
I think so too. And I agree with Andrew Bell saying Thinkorswim needs a click tool for anchored VWAP. Brian Shannon was saying the exact same thing, and they're probably not going to do it. Don't worry. But Kenny's got the code. Kenny's got the code. So
it's true. Those lines, they are for Kenny's members and
it's annoying that Thinkorswim makes you do that. It is. By the way, me and Brian Shannon both use Thinkorswim. We both actually do use it. Spencer does too. So, I mean, it's just a bummer, but Kenny's got the code. So ping Spencer.
Or just join the room. All right, Frank, where you at?
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Frankie, baby.
Hey, what's up, guys? Good morning.
Listen, when I find out that Frank Cappelleri is joining us in the show, you know it's going to be a good day.
Yes, sir. Good to see you guys again.
Man, we got so much to talk about. Can we just be the old man in the room for a second? Can we be an old man?
I think by default we are, so let's do it.
Okay, so listen, true story. So Frank Cap, OG, for you guys don't know, I mean, real OG I'm super jealous. I mean, whatever, everything works out for a reason, so no complaints. But like Frank Cappelleri got to work with two real life living legends for years and years early in his career, and that became instrumental in the way he looks at markets and, you know, his, you know, in my opinion, your maturity. I think, you know, I call it Frank, you know, coolest customer on Wall Street, right? Just a cool cat, right? So can you talk about who these folks were, what you learned from them, and then I want to dive into some key concepts.
Oh, sure. Alan Shaw, Louise Amata. I mean, you know, the best thing about that, well, many things, but I had no idea, number one, what technical analysis was or who they were coming in 1997 in the middle of obviously the dot-com rally and eventual bust. And so it kind of told the story a lot. And I think this really nails it. And so in the middle of this, you remember anyone who was in their, say, 40s or 50s, in the middle of that internet bubble, had already experienced the stock market crash of 87, already probably went through the Nifty 50 crash as well. And so you're just hesitant by nature to grasp onto that, especially when you have people new to the market saying that, you know, they can day trade and make more money than anyone on Wall Street. So people that were kind of burned before didn't want to embrace this, except, you know, Louise and Alan already seen that. But because of looking at technical analysis charts, more specifically relative strength, you're buying, you're sticking with things that are working. So, you know, we had this one model we go through, just basically relative strength model called the group spectrum. And all that was looking at relative strength lines for the industry groups once a week on paper. And guess what? Sticking with the ones that keep going up. So that just allowed those simple rules allow that model to like catch the bulk of that rally the entire time. Now, of course, at the end, you know, you had to deal with a pullback toward the very end, but how many people were able to just do that? And again, that already experienced crashes and were hesitant to you know, go into it. So it brings us to right now, similar in some
Hold on, Frank, when you were with them, at any point, did they still have the sliding things on the wall, or was that gone by then?
Oh no, that was my job. That was
Hold on,
number one task. Oh yeah.
Tell me what you did. Tell me.
Wait, explain the sliding.
Folks don't know what we're talking about.
Okay, so
okay,
so there's a big chart room. Now, obviously, everyone was familiar with Fidelity.
This is Smith Barney.
This is Smith Barney. So we're on like the 38th floor, beautiful real estate over there, huge room, and the entire back of the room was a massive wall of sliding walls back and forth. Looking at the Dow Jones Industrial Average going back, I don't know, 15 or 20 years, and graph paper like this, right, little lines were the dots per day. And so my job was to take my little cup of markers, all different colors, walk over to there and mark each one down. So again, looking at Wall Street Journal, Barron's, it was, you know, any indicator you can imagine. And so
what happens if you make a mistake? You use like whiteout?
It's a great question. Not allowed to. But so, as Louise always says, you know, let's walk through history. See the last time that's happened. It's you can't even conceive that now.
And you're literally walking.
Yeah, literally walking. And literally. So, but that was just, you know, anyone who walked in there, there's so many financial advisors come in through the years, right? All those Morgan Stanley advisors now were Smith Barney back then. They come in for training sessions. Alan loved teaching everyone. I sat in all the classes. And so just going through all that, you know, during it was a historic time anyway, but just understanding the crux of how that happened. And they were really in the middle of that, you know, transition from, you know, just hard copy stuff like the Mansfield's charts, right? Those chart books are outstanding until, you know, obviously getting everything online. So it was a really interesting time with a great experience with obviously two pioneers.
All right. So a lot of the work that has come from those folks and yourself has been in the bond market, right? And, you know, the last thing that I want to do, because I used to do it quite often early in my career, I was halfway through John Murphy's intermarket analysis. Next thing I know, I think I'm a macro strategist. So I've overthought the intermarket analysis plenty in my career, and I make it a good point not to. And I think I've done a good job of that. So I don't want to do that. But I think the bond tsunami that's out there, there's a few things happening. Number one, the volatility compression that we're seeing in treasury bonds, where nothing's happened in the last 3 years, and just like this, like that, you and I are old enough to know that's not going to last forever. And when that Frankenstein wakes up, look out, right? Because when the bond market's moving, shit is like, all right, okay. So you got that. That's out there. Then you have this, like, in my opinion, this like unintended long bond position by American investors and investors worldwide because of their lack of energy exposure and their lack of commodity exposure, with none of these investors own any of. So in an environment that interest rates and commodities and energy are doing really, really well, right? Bonds are getting smoked there, right? So I think that there's a huge vulnerability to investors that have, for all intents and purposes, an unintended long bond position, right? And then so when I see these massive assets vulnerable, I think that can play a huge role in the equities market, right? Because it's impossible for it not to spill in. Doesn't necessarily have to be a bad thing, by the way. Could be a good thing, especially if you own the right stocks, right? I think there's going to be winners and losers, but nevertheless, that's the storm that I think is building out there somewhere. Not that it has to come tomorrow, but it's out there. You think there's any truth to anything I just said?
Definitely. I mean, I think we're just talking about this in, the Cap Thesis chat room as well, where we're seeing these, yields moving higher, and we're seeing it too. And obviously the commodities themselves, right? Big bases being broken out of, not just energy, right? Some food energy, talking about food and agricultural, wheat, corn, soybeans, all that.
Live cattle, all-time highs.
Yeah,
those
right.
ribeyes, they ain't cheap.
Yeah. And so no one really is paying attention to that much, but that's there. And we all know the last time that happened was 2021, when the Fed wanted to ignore it initially until, raising rates at an historic rate. And you know what happened there. So I think it's an interesting spot now, because right now, 10-year yield, you're literally net flat since basically October 2022. And so, like you said, JC, when the market's that's doing nothing, even can go back and forth a little bit. What's happened over the last 4 years? We had a great equity market, except for a few, periods here and there of volatility. So I think one thing is, the rate level is important, but obviously it's the acceleration, the pace we go to get there. That's going to be important, especially, if you continue to see what we've seen in large cap growth and tech getting more and more extended. If there's a shock, and who knows, maybe with a new Fed governor coming in, there's going to be growing pains in terms of what the message is, how the market's going to accept it, because we know how to interpret what Powell was saying, at least over the last number of years. So I think all that is
Frank,
something.
The market, as you are well aware, is a forward-looking discounting mechanism. And what's hilarious is that interest rates stopped falling as soon as the Federal Reserve started to lower interest rates. And interest rates have been going straight up ever since the Federal Reserve started lowering interest rates. Now, obviously, we're talking about different durations, but nevertheless, it's still hilarious, right? So, I just, when I see inflation-protected treasuries outpacing nominal yielding treasuries, and now all of a sudden, a few months later, it's like, oh, CPI is hotter than everybody thought. Oh, yeah? I can't believe it. The bond market got it right again. Like there are signs, right? And you got to pay attention. All right. I wanted to talk. So I'm not crazy. There's something there.
You're not totally crazy.
All right.
Can we talk about sector rotation, please?
Yeah, sorry. I'm being very selfish here because we got Frank Cap, and this is something I've been thinking about a lot. And I want to talk about the IPOs with you. So let's see what you got. And I got another one for you.
Can we start with what is it? I guess slide 12, which is what's the phrase? Is it the industrials? Is that what
industrials, baby? This is the sector that has the highest correlation with the S&P 500 of all the sectors. Ain't that right, Frank?
Yeah, but not recently, right? And that's the point, I think, with everyone's making the case, and you guys are talking about it earlier. Anything versus the S&P 500 now is going to look like it's underperforming because it's driven by large cap tech, which is obviously doing so well. So when I think about rotation, it's one thing to think about it in a traditional sense, where you go from large cap tech to something else. But from my perspective, you want to see that rotation go into an area that looks like it's ready for it. I mean, that this is a bullish pattern, right? We know the XLI and many other things are up from its highs or from the lows from late March, but what has happened over the last few weeks? It's consolidated above a flat 50-day moving average. And to me, that looks like a classic couple of handle formation. And it's not only XLI, right? It's XLF looks like that, a few others as well, where if I'm looking for the longevity of this market to continue, what's going to happen? Eventually, the parabolic nature of those tech names, especially SMH, is not going to persist, right? It may continue, but there's going to be back and forth movement. And so you want to have areas that are about to, looks like they're about to break out, actually accept that, right? And so when you have a lot of bullish patterns forming underneath the surface like that, that is what can drive this going forward.
You think this is a bullish pattern, Frank?
I do. I think it's right now with the XLF, it that pullback now has to be a higher low, has to probably hold near that 50-day moving average. And so we'll see what happens. But I mean, that is what you want to see in terms of a pullback that's consolidating for a bit. If it undercuts that, pulls back more, of course, is a different story. But so far, the RSI has been holding near, the midpoint as well. And we can see what's, how that works, of course, in uptrends, right? Oscillates between.
You're talking my book, Frankie. I got long the Berkshire. I'm in, baby.
Oh, yeah.
All right. So I'm in. So let me ask you this. So then the fact that the financials, the XLF, just closed at a new all-time low relative to the S&P 500, right? Lowest levels ever in history. Even when they were drawing, when young Frank was drawing with the markers on the wall, right? Lowest levels ever. That's just a denominator fallacy. Impossible to keep up with tech. That's just what it is.
Right. I heard you guys talking about that, and I agree. And again, it's one thing if XLF on an absolute basis was making new lows. It's not, right? It's just, I think we have to pay attention to all these things because, again, we want to look for areas that present good risk reward opportunities, right? So if I
hate making exceptions though, Frank. Be like, oh, pay no attention to this because it's just because there's so much tech. I hate doing that. Like, it's just whenever I do that, it's usually not a good idea. But like here we are doing that, and I think that's right.
You mean paying attention to other areas or not?
No, being like, hey, new all-time lows in the in financials relative, right? Like in theory, like that's a big deal, and we're just kind of ignoring that, being like, oh, it's just because the denominator has too much tech. Like I hate doing that sort of thing, but I think that's the right thing here.
Yeah,
especially I mean, on an absolute basis, it's not acting poorly, and down the cap scales, financials looking pretty good too.
Exactly. Right. And as long as we continue to see the structures of these patterns remain viable like this, I think there are, potential areas, again, for rotation to come into, and you want to see areas like this that have formed bases already, as opposed to like just trying to rally from new all-time lows.
Communications looks just like this, huh?
Right. And so another thing is like you hear rotation and you think of from growth to non-growth, but it's not like this now, right? It's technology and there's everything else. Well, a big piece of that is communication services, which are large cap growth. You can kind of box them and within technology if you categorize it differently. And what does that look like, right? XLC is net flat since last September, right? And so and most recently now it's traced out an inverse head and shoulders pattern. And so we know there's some areas that are struggling within there, but to me, again, I'd rather buy something that's about to break out than something that
doesn't look parabolic to me, Frankie. There's nothing parabolic about that.
Yeah, exactly. So this is the underlying part of it, where you're going to, eventually you're going to see SMH, go down for more than a day or two. Don't tell Kenny Glick that, but it may happen.
But
eventually, so what needs to happen?
13, the semis. Yeah, listen,
right.
Kenny comes in here. Kenny gets short quite a bit, actually, because Kenny's an intraday trader, so he's fading pops and he's buying drops, right, in an intraday basis. So it doesn't really matter. So it's just, but nevertheless, semiconductors. Even when like large cap tech was struggling, Mag 7 was struggling. You were seeing strength out of semis. You were seeing strength out of hardware. Like there was still strength. There was really software that was really holding things back. And I was like, man, are the others going to catch down or is software going to catch up? And then we made the bet that software was going to catch up. We'll see what happens. But the market could go up without semis, Frank?
It can go up, not at this clip though. And we kind of saw that at the end of last year, right? Large cap tech semis, peaked in late October. And we were able to see that's when the foundation came through, right? Very strong breath. Now the S&P didn't rise all the way from there because then of course we got hit with Iran news, but at the same time, like the market was strong still, right? And I think you were getting to that point where, it's going to be very stretched. And obviously SMH, right, yesterday was a perfect example of just how right now people are just willing to buy any dip. So right now, 5-day moving average, right, obviously one of the short term moving averages we can get, it's only closed below that line one time, just once. That can't persist. But at the same time, just closing below it one more day, we can't just say it's over. So best case scenario for this, I think, JC, is that now we're entering a phase where SMH maybe back and forth movement, and we get to see another continuation pattern then form. That may take, who knows how long to actually play out. But if and when that does happen, that's when you can see capital flow into other areas. And that's when breadth can then start to perform better overall.
Man, they're coming in and buying these dips. So NVIDIA, largest component here of the SMH. You know how big NVIDIA is in the SMH, Frank?
Pretty big.
It's 18%. 18%. NVIDIA alone, over $5 trillion in market capitalization, is bigger than every country in the world. All the total stock market of every single country in the world. NVIDIA is bigger than all of them, except America, obviously, Japan, and China. That's it. NVIDIA is bigger than every other country.
Incredible. And that's done next to nothing on a net basis in the last year, too. Yeah. Right? That's saying something with what
SMH doesn't seem parabolic to me. Let me ask you this, Frank, and you can take this chart off now because this is important. Man, we talk about NVIDIA, $5 trillion in what, a $70 trillion stock market. We're getting IPOs coming out that are $1.5 trillion, $2 trillion. These are percentages of the S&P 500 coming out at a clip. I mean, you were there in the 90s, right? And there was a lot of selling going in, post to those IPOs. But like relative to the overall total market cap, these things were rounding errors, right? There were a few $100 billion, like not a big deal at all. This is a whole nother level. So I look back at Ford in 1956, RCA in 1919, U.S. Steel in 2001, in 1901, U.S. Steel. Like these were really impactful in terms of the size of the market that you could even compare to what's coming. Man, when you look at the biggest IPOs, it just, when Coinbase came out, what happened to crypto after that? It feels toppy. There's precedent to it. Market, Dow Jones Industrial Average got cut in half after the Ford IPO, after the RCA merger, and after the U.S. Steel merger. Got cut in half right after, within weeks or months, right after, every time. Is this time different? Could be. I don't know. It just seems like a lot of overhead supply, a lot of selling pressure coming onto the market, like a lot, like trillions, not like a few $100 million, but literally trillions. Seems like a lot. And these companies are not raising money so that they can grow their companies. They're raising money so that their investors could get liquid. Just like the Ford family in 56, by the way. They weren't raising money so that they could build factories and hire employees. They're getting liquid so that they could diversify their family wealth. Like it's documented, like we know. And then we saw what happened to the market after. So again, I see all of these things and I wonder, and then they start changing the rules on me. Oh, this is going to get added to the index quicker. It's like, oh shit, here we go. Right? Come on, Frank, talk to me. Should we be scared?
Yeah. I mean, there's definitely something we can't ignore. And the fact that things have changed so much too with the amount of IPOs that have come out over the last number of years, which are very few because, private credit has been such a big part of this, right? I mean, these things are, who knows what could have happened. Something like OpenAI or whatever, or SpaceX came out 20 years ago, probably would have happened already 5 years prior or whatever it was. So it's a very different, I think, the part of it, JC, is like, regardless of what happens to the market, investors have to be very careful when they potentially get access to these publicly traded markets or when they actually IPO, because they're expecting to get a piece of it on the IPO date or soon thereafter. It may not act as we've seen before when things continue just to move up pretty instantly.
Remember the disaster that was the Facebook IPO?
Oh, yeah.
What a disaster.
I remember the disaster that was the Uber IPO. Uber, usually like a big IPO, it won't actually open for trade till like 12, 1 o'clock, right? Uber was like 3 o'clock. It took all goddamn day to get their order book together because, I don't know, there's matching supply and demand. And
some of you youngsters might not have been around in 2007 when Blackstone went public. That was a huge deal. And then the market literally crashed right after.
Yeah.
I think it was such a great crash. They actually call it the Great Financial Crisis. That is how bad it was when Blackstone came out, and some of these youngsters are like, oh, that wasn't that big of a deal. At the time, Frank, tell them, at the time, that was a big deal.
Oh, without a doubt. And it scares you, like, and you hear say what it does for sentiment afterward, because then people are just scared for a long time, and then that's when things shift once more. So, it's an interesting thing. And again, as we go through the year with all that, we'll see where the market is as well, right? If we're at a
Throw
spot
up the
where
S&P chart for Frank there. Got some lofty expectations there, Frankie.
yeah, well, this is
Oh,
interesting as
Almost
well,
like
right?
you're a trend follower or something.
There you go. So this is a bullish flag pattern. It's only a few days old. And, our friend Ryan Dietrich does a very good job of sharing some of these, when I put them out there. And we always are very, I wouldn't say amused, but it's very interesting to see the response to this. And so when you first put it out there, when, we've had the initial pop, I would say that the sentiment was extremely bearish about whether this, number one, was a flag pattern. Number two, how can you have a lofty target like this? It's never going to work out. We're already up enough. Okay. So now 2 weeks later, obviously we had an extension. Now I put these out there because guess what? They're classical chart formations, which I've been taught to least respect when they happen. I'm the first to say it too. And I talk about things on Cap Thesis that every breakout is tentative until you see a follow through. And the best case scenario, of course, is you see clean follow through, which happens in what? Uptrending markets, bull markets. So who's to say? Could this pull back and completely negate this? Yes. But obviously, the conviction goes higher as a market extends. And the best part about this one is that, there's built up a few percent gain at this point above it, where the market can pull back and then form what? Another formation then to leverage. So I think, when you have a breakout like this, and this is the third one that we've had, already 2 targets have been hit, it just adds to the ability of the market to digest that. And again, you could see now potentially have a few weeks of consolidation, even months, to build up a much bigger foundation and take advantage of later in the year. No idea what's going to happen, but we've seen this type of price action before. We come off of a corrective phase. You have huge amount of buying at the very beginning, led by what? High beta, large cap growth that eventually fades, but it doesn't mean the uptrend needs to completely fall apart either. That's when rotation happens. That's when you have a more persistent uptrend, which then you can identify more bullish patterns across the market landscape to potentially take the market higher.
Frank, I just want to give you a huge compliment on your bar charts. Bar charts, underrated, undervalued. I'm so bullish of bar charts. It makes things so clean. Your charts are obviously very clean. Shout out to bar charts, right?
Shout out to bar charts. Let's go.
I feel like all the kids these days and their candlesticks, and their Ichiro clouds, like Kenny calls them, right? Like, good old fashioned bar charts, open, close.
I was going to say
high.
also known as open high, low close, right?
They could be.
Yeah,
They could just be the high, low close. It depends on what kind of mood you're in, right? Frankie, tell him. He doesn't know.
Yes, sir. They are clean.
All right,
and again,
Frank Cappelleri, everyone. Thank you for the charts.
Where can the folks reach you? Let them know where they can find you.
Go capthesis.com. You can find all the content there. And of course, on X, just at Frank Cappelleri.
You're the man. Thank you, Frank.
Thanks, Frank.
All right. Thanks, guys. Take care.
All right. As always, I want to end the show with some thoughts, some wisdom, if you will, from our resident wisdom purveyor, Dr. Phil Pearlman. We got
bring him out.
Let's bring him out.
Pro Dog, you sell some Berkshire puts?
Stop asking everybody that.
Oh, you know what? I have not sold them yet. I have not yet sold them.
Right.
That just, I got other big things going on.
Don't worry about it. It's just a little cha-cha, a little extra cha-cha.
No. You're right. I was thinking about it too, but it just never got around to it.
Don't let Pearlman fool you. He'll go out there and he'll get a little frisky and sell some puts naked.
I did. I find, for now anyway, this stock market does not give a fuck, right? Doesn't give a fuck. And last week we were talking about the flip side, the opposite of tilt, which is selling winners too soon. We have this tendency to get more risk seeking within the domain of losses when we're losing money, and then we do the opposite. We do the exact opposite of what we're supposed to do. And so I got a couple emails about it. And they were like, well, sure, Phil, I find I have trouble holding on to my winners and really riding them.
Yeah.
And you pointed that out beautifully. But what do I do now? Like, what do I do about it? You know, like, what do I do? And so I gave it some thought, and here's what you do. Okay, so let's say, so right now we are in a market regime. Stock market does not give a fuck. We get numbers this morning, whatever. The bond market is, you know, the yields are breaking out or whatever. I don't even understand all this stuff. It's too complicated. I do understand price, and I see that the QQQ goes up every day. The SMH does not give a fuck. The SPY doesn't give a fuck. The VTI doesn't give a fuck. And they're just going up. And, you know, the Berkshire looks like it might be bottoming. And the mistake that people are making now is not that they're holding on to their losers. The mistake, and that's the biggest mistake you can get. Doubling down, only losers average losers. Was that Paul Tudor Jones?
Yeah, only losers average down losers.
Only losers average down losers. That's the primary market mistake. But that's not the regime we're in right now. I mean, unless you're trying to short this market, and if you are, God bless you, you know, like the Mother Mary or whatever you guys do, whatever you Gentiles do, you know, it's like bless you, you know, bless you, Father, for I have sinned. I wish you well. But the mistake people are making right now is
Gentiles that are fighting trends. Jews don't fight trends.
I don't think Jews fight trends. I think Jews, you know what they do? They go with the trend and they have a nosh. That's really what they do. That's like pretty much what they do. But anyway, though, so the primary mistake right now in this regime is that people are selling off their winners too quickly and they're not riding them. And a ton of money is made during these periods if you can ride them, if you could sit on your hands, like Livermore said, if you can just rebalance rather than just blowing out and like realizing the gains and feeling great about it, holding off on that ego hit, that dopamine hit, what the kids say these days. So here's what you do. There's two things right out of the gate that you could do to not sell off your winners too soon. Now, I just want to bring that up to everybody. And, you know, Richard Feder, I know you're out there, and a couple others. Number one, play smaller. Just play smaller. Like if you're making a plan, but not sticking to it, you're playing too large. You don't have the cojones yet to play at the size you're playing at because you're making a plan, but you're not following through on it. So you play a little small. You could still make a lot of money playing smaller. And you learn how to do it. And then you can play bigger. It's like warming up. It's like practicing. It's like going through steps. It's like you play small before you play big, right? Play in the minor leagues before you play in the big leagues. That's all it is. You play small, you learn how to make money, and then you play bigger. Or you've been doing it for a while, but you're still finding yourself in this situation for whatever. Maybe you have other stressors going on. Maybe whatever, the conditions aren't right. You just come back in, you play a little bit smaller. You could still make a lot of money playing smaller. So that's number one, you play smaller. Number two, and this is at the root of everything that I believe, and it's the root of Fitness Alpha, and that is get yourself healthy. Because the healthier you get, the more stress tolerance you get, the better your decision making is, the better your ability to focus is. So the two cures, the two simplest, easiest, most straightforward cures for selling too soon or for holding your losers too long, even though we're not in that regime right now. We're in this bullish regime. If you're holding your losers too long, you got other problems. But if you are selling out too soon and then having regret and you had a plan, but you didn't stick to it and you just like, oh, I felt, you couldn't take your time. Play smaller. Get your fucking self healthy. It's spring. It's a perfect time to get healthy. You can get outside, you can start walking. You could do the dad bod jog, right? You don't have to be like
what is a dad bod jog?
It's a slow jog, man. Come on.
It's just you get out there and you just fucking do this a little bit.
Oh, yeah. Story of my life.
Miles around your neighborhood. You don't have to be Usain Bolt.
Is
know,
that what
you don't
I'm
have to
doing?
be,
Am I doing the dad bod jog?
dude. We
Yeah.
should take a look at your splits, and we'll.
I
and
tell
what-
my neighbors sometimes that just move in. I'm like, listen, you're gonna see me running around, and you're gonna think that I'm like doing it in slow motion or something like that. Don't let me fool you. That's just actually me. Everything's fine. I might look like I'm dying of a heart attack. I'll be fine. Don't worry. That's what I tell them. I give them a warning.
Dude.
See that guy? Because these are hills, man. My neighborhood is like super hilly. This ain't Miami anymore. You know what I'm saying? So like, it's real. I'm
Dude,
struggling.
Zone 2 is where it's at, our man Higgins. Zone 2.
Yeah, you don't have to go fast to get super healthy.
I don't know how to get fast. I never learned that.
Just stay in Zone 2. You'll be fine. Right?
Yeah. Yeah, I half
What is
believe you,
Zone
JC,
2?
because I know you're a freak of an athlete. By the way, I don't know if you guys know this, but this guy is a real deal athlete. He's a college athlete, pitcher in
Oh, the pitcher. Athlete's a strong word. My friends,
No,
my
dude.
friends would argue.
I know
otherwise.
you, man. You're a super athletic guy, super hardy constitution. But anyway, if you're having trouble holding this, I mean, the market goes up every day. I mean, if you bought SMH right, are you still in it? Have you taken partial profits, but you're letting the rest ride? Did you double down when it broke out? Like, what are you doing? If you sold out too soon, like you sold half and then, you sold half again, and you experience that short-term dopamine hit or that ego boost of like, realizing the gains. That's a great double entendre, that word, realizing losses and realizing gains happening on two levels. Perfectly chosen word by whoever coined that. But if you are doing that, you got to play smaller, and that will allow you to not have as big of an emotional hit and hold on to those winners. And it will allow you to stick to your plan. And then number two, get yourself healthy. And that one, by the way, not only will you make better decisions and have a higher level of stress tolerance, a higher level of resilience, but you'll enjoy life more. Your relationships get better. You'll live longer. You'll be able to pick up your grandchildren when you're 75 years old, the whole 9 yards.
Awesome. Couldn't have said it better myself.
What's that?
Couldn't have said it better myself.
That's the regime we're in.
All right.
I'll jump right to recess here because we got Pearlman. I did the honey thing. I did the honey layer, right? So I just did
before raw, you put honey on a steak.
Yeah.
Did you season it before you put the honey on?
No, before. So usually I'll put a little olive oil and then I'll season it, right? This time I did the honey, thin layer, not a lot, thin layer on each side, salt, pepper, garlic powder, onion powder, and then I just threw it on the grill. Now, I read on ChatGPT, so it must have been true, that you want to start slower rather than throwing it right on the hot flame because you're going to burn the shit out of all the sugar and you're just going to have a black crust. So you want to start it out slower and then finish at the higher heat. So I did it. A good thing I checked, right? So then I did that and it was great. I really enjoyed it. I would say it's a lot like my Asian, when I do Asian marinades, how there's a little hint of sweet on it. You know what I mean? That's kind of what it reminded me of. It wouldn't be an everyday thing at all. I like the everyday probably better, but if you want to like mix it up every now and then, like I didn't mind it.
And what was the cut? What was the cut of
the
meat?
ribeye?
Ribeye. So just
Supposedly,
super classic everything.
with the ribeye. I was gonna do it with the ribeye either way because that's what I eat. But allegedly, the honey goes best with the ribeye. Something about the fat or something like that.
Oh, dude, you're getting the fat. You're getting a little bit of the good sweet in there.
Yeah.
It sounds,
that's what it is because it caramelizes the fat. That's why. Yeah, that's what it is.
Yeah. No, that
All
sounds
right. Well,
fantastic.
speaking of steaks and grilling, for the first time in my life, I am in the market for a new grill. If anyone has any recommendations as far as brand or style, I'm leaning maybe Costco or just get like a.
Dude, you get the cheap one, $200, $250. You beat it to hell for a couple of years, then you get a new one. Simple.
Yeah, maybe.
I wish it was a better answer. That's the answer.
All right. Well, let me know in the chat if you have any recs.
Get the cheap, whatever one is on sale at the Home Depot or at the Lowe's, $200. You get that one. You beat it to hell. You get another one 2 years later. I'm telling you right now. Don't overthink it.
Maybe I get a Blackstone or the kinds with the black tops. I had this fantasy of like that I like will like wore cosplay as like a short order cook in a diner. I'm just like cooking all the things on the breakfast every day. You know what I mean?
You know what? I got one of those, and they're great.
Yeah.
But I find myself going back to the grill more because they're a little bit harder to keep up. Like the grill, you know, you just buff it down and you're good to go for the next round.
Yeah.
But with this thing, you really got to have your clean. You got to have the paper towels out.
I
You
don't
got to have the
want to do
avocado
maintenance.
oil. You got to have the scraper. I use it, but I use it less often.
All right, fair enough. Fair enough.
Yeah.
All right, busy day for us on the channel. First off, PSA: if you are a member of the Beat Report, the weekly strategy session is not at noon. It is going to be at 10 o'clock, so in like 20 minutes. So that's where Strazza went to go to prepare for that. We've got Kenny live at 11. Jeff Mackey live at 1, talking all about the consumer. We've heard in the past couple of weeks from companies like Chipotle and Whirlpool and Starbucks. They've been giving us insights into what their customers are doing. Some of it's not so good news. Jeff will talk about that at 1 o'clock. Riley's going live at 5. We're building data centers in space. Who's building these data centers and when and how? Riley has all that. That'll be 5 o'clock today for Godspeed Live. That's what we got. Thank you to Phil and to Kenny and to Frank and to all of you in the chat. We'll be back tomorrow morning, bright and early, same time, same place, same channel, same everything. We'll see you there. Same market. Hopefully.
YOLO responsibly.
Run it.